Hey, what's going on everybody? Back again with another update on my dividend investing portfolio. So what I do each week is I'm putting in a few $100s and I'm just documenting my journey with dividend investing and I'm tracking it in this Google Sheet. So we can see here that my stock value right now is sitting at about $10,588. I have $633 additional in cash, so that means that the total account balance is about $11,220. But you can see I've invested $10,550, so that means I'm up overall in the account about $670 or a total of 6.36%. So yeah, things are looking good. The average yield is 4.16%. This is slowly dropping over time as I'm buying more growth-oriented stocks and less high-yield ones. But today I'm going to be going into a bit of a mixture, I guess, in the stocks that I buy in this video. But yeah, it's nice to have $440 of passive income every year from these dividends. You can see that works out to about $36 or $37 per month, and I haven't quite hit that yet because this is the forward dividend yield that we're talking about. So especially on some of the stocks that pay quarterly, you need to wait at least 3 months sometimes if you to get that ex-dividend date till you actually receive the payment. So this number is always a little bit ahead of me and I'm always trying to catch up to it. But I just use this as a bit of an indication. It's a bit of an estimate. But yeah, it helps me just for projecting, how things are going. But yeah, overall, the sector breakdown here is mostly in utilities. Then the next biggest would be real estate. And then followed by the rest. And then you can see here in the holdings, we can actually open this up a little bit. You can get an idea of the breakdown of all of the different companies that I'm holding. So yeah, let's jump into the portfolio here and take a look at what's going on. So right now I have it filtered to basically display the biggest holdings first. So I have percent of holdings, and I've sorted it from Z to A. So that would mean that Fortis and Bell and Emera are my biggest holdings, and as we go down, you can see this number decreases towards the bottom, where we have smaller and smaller positions of mine. So what I usually try to do is I try to buy stocks when they are in the red for me. This indicates that they're below my average buy price, but I'm also trying to even out the distribution a little bit, because here, like you can see, that Fortis makes up almost 8% of my portfolio, compared to the smallest one, which makes up about 0.5%. So I am trying to buy stocks that are in the bottom half here, but some of these you can see that the unrealized gain is really big on a lot of these, and that's because I did buy them in the last few months, and as the market is recovering, they've just been shooting up. And the ones that haven't been shooting up so much are the ones that I've been buying more, and that's why you see them here with much bigger parts of my portfolio. But what I want to do, no matter what, today I've been looking at Fortis and Bell. These are my top two companies, and they are just barely in the red for me, and I think that these are still a strong buy for me that I'd like to jump on before they shoot up again. So I think I'll be picking those up. And then otherwise I was looking at just kind of building out some of the ones that are down here in the bottom half of my portfolio and really looking for some more monthly dividend stocks that I could get. So the ones that came to mind are Exchange Income Corporation, Northland Power, and also Severia. Now all of these are up quite high. Severia is up 16.32%. Northland Power is also up 16%, and Exchange Income is up 21%, but compared to some of the other ones, they're more like 30%, some are 50%. I think I'm okay with jumping in on these today with just a little bit of money into each. If we take a look at their Sparklines, we can get a general idea. This is the max all time, and the Sparkline function in Google Sheets doesn't actually give you the duration, but you can just get a general idea that the trend is going up here. This would have been the dip right in March last year. And then we can also maybe set this to a little bit more recent, look at the 5-year trend. Again, we're recovering here and a slight trend of growth. We can also take a look at Northland Power, which is here. Get an idea of the last 5 years. We're right up against the maximum here, but I still think that this only makes up 1.4% of my portfolio, so I'm just going to add in like $100 or something today. I don't really like buying stocks when they're at their all-time high, but I really feel like I need to start putting some money in, and I can't just wait for everything to crash again, so I think I'm okay with slowly averaging into some of these more expensive stocks. You can take a look here at the maximum as well, and just get an idea that here it has just gone out of control. And yeah, of course, it's probably going to fall down at some point, and I have no idea when that will be, but I'm okay with putting in, a little bit more into this position. We can also take a look at Severia. So that is this guy here. Again, we can see this thing going on up here in the last couple of years, and let's zoom in to the 5-year to get an idea of what this time span is. You can see here, this is March. And then, yeah, again, just a general upward trend. And this one is also a dividend aristocrat, I think. They have a strong history of growing their dividend yield over time and paying it out. So yeah, I think that's mostly it. I think also if there's any money left over, I might just pick up a little bit more of ATD, Alimentation Couche-Tard. They've also experienced a little bit of a dip lately. Let's take a look. It is right here. And maybe let's zoom in on 5 years. Yeah, so this is March right here. And then this is the little dip that we're talking about right now. So I'm going to jump on that a little bit. I bought in this dip, so I'm up a little bit. But I think I want to just put in a little bit extra cash if I have some. So let's go into Wealthsimple Trade, which is the broker that I use. And honestly, if you're in Canada, this is a really good broker to be using. There's no trading fees. And if what I'm doing, like I'm trading in my tax-free savings account with only Canadian stocks, so I don't pay any trading fee to get them. And I also don't pay any exchange rates. If you're buying American stocks, it's a little bit expensive on the exchange rate because you pay it on the buy and the sell as well. But also because I'm investing in my tax-free savings account, I don't want to be paying withholding taxes on the dividends from American stocks as well, which is something you have to watch out for. But if you're like me and you just buy Canadian stocks in your tax-free savings account, Wealthsimple Trade is a really great choice. So there is a link in the description below if you'd like to try it out. If you use that link, you'll get $10 deposited into your account when you make your first trade, and I'll get a little bit as well, so that's a nice way that we can kind of help each other out. But anyways, let's jump in and actually start buying some of the stocks. So the first one I wanted to pick up was Fortis, which is right here. And I just want to take one at a market buy today. So we're going to play first one for a market buy. That'll be fine. Okay, and then I also wanted to take one of Bell. So Bell is BCE. And with Bell as well, I just want to take one at a market buy. We're going to place that order. This is right around my average buy price, which I'm okay with. The next one we can jump into is Northland Power. And again, we can confirm that what we were looking at of this like crazy upward trend lately. But that's okay. I'm just going to put in, I think, 3 stocks. So I already have 3 at the moment. I'm holding 3, so I'm basically going to double my position, but really I'm just putting in around $150. And so this is going to basically even out my gain, which let's see where it is. Yeah, so I'm up 16.2%, 16.4%, and it's basically going to half that when I double my investment. So I'll still be up, and then I'll be able to sit on that monthly dividend. So yeah, let's go ahead with that on a market buy. I'm going to place the order. Cool. The next one to grab while we're here is EIF, that is Exchange Income Corporation. Again, you can see the same trends here. Nice recovery going on since March, and these guys are also paying monthly. So I would just want to put in 4 for also around $150 with them today. So we'll just go with a market buy on that one. And I'm okay with doing market buys because, of course, the price can change a little bit between, when I actually click and when I get it. But if it changes by 1% or something like that, it's just $1 or $2. And I honestly don't think it's going to change by 1% because you can even just look here. It's actually not showing the numbers. You can see it better in Yahoo Finance or on the mobile app as well. But I don't see it jumping up like here or something in the next few moments. So I'm okay with that. It just makes my life a little bit easier because then also I don't have to wait to see if the order is clear while I'm filming the video, and I can just, kind of go straight to YouTube and just post this right after I'm done. Okay, so let's move on to Savaria, which is SIS. Okay, and again, we can get the same idea here of what's going on. Nice spike up here. Would have been nice to buy here, but of course you never know with these things. So anyways, with the same idea, I'm just going to go in and actually going to drop in 8, I think. So this will be about $130. Right now I'm sitting at 113, so this is going to more than double my position in them. Again, which is going to roughly half this, to an all-time performance of up about 7%, which is still okay with me because they're paying out a nice dividend of 2.9%, and it's always growing. So yeah, let's go ahead with a market buy there. Place the order for 8, and then that's good. And let's see what we have left in the account. We've got $97 left in the account, so let's go check what we can get with ATD.B. Okay, cool. And again, you see the same dip that we're on here, which is exactly what was going on in the Google Sheet. So I should be able to buy 2 of these. Yeah, we've got $90, going to spend about $80, and going to go with a market buy on those as well. All right, so that's all of the buys done. Let's jump back into the Google Sheet and go and fill out the purchases that I just made on the Transactions tab. So here what I do is I check the notifications that I get from Wealthsimple Trade to confirm the actual price that I paid, because it's usually not exactly what the market buy said. And then I also make sure that I'm typing in the tickers correctly. And on the left-hand side, if I type it correctly, then I'll know because the actual business name that I'm expecting shows up there, which is a nice check for me. And like I said, what I like about Wealthsimple Trade is that the trading fees are nothing. So here I just made 1, 2, 3, 4, 5, 6 different transactions. If I was paying $10 per trade, that would have cost me $60. If I was paying $5 per trade, that would cost me $30. So yeah, I just don't pay fees on that, and that's a really nice thing to do. If I was paying trading fees with a different broker, I would make sure to make bigger purchases. But what you can see, like in this video now, is that what I'm doing is I'm trying to balance out my portfolio. Sometimes with good buys because they're down, and other times with buys to make sure that the portfolio is staying balanced. So that's just something I like about Wealthsimple Trade, and that I enjoy being able to do that without paying fees. So anyways, let's go into the the summary page, and just check here that the estimated annual dividend income has increased. So before, at the beginning of the video, it was $440, and now it's $462. So my annual passive income basically just increased by $22 per year, which is really nice. And also, even if I did nothing else, like that number will continue to grow in the future as these dividends grow. A lot of these companies, as dividend aristocrats, are always growing their dividend year over year. And so that number is just going to keep climbing up naturally by itself, and also because I'm adding in more stocks. So yeah, guys, that pretty much wraps up this video. There's just a little bit left in the account, and I'm going to save that for another day. So yeah, if you like this spreadsheet as well, there's a link in the description where you can get it. So yeah, take a look at that. Take a look at Wealthsimple Trade. And thanks for watching, guys. If you do like this video, make sure you hit that thumbs up because it really helps me out and I appreciate it. So yeah, guys, thank you so much, and I will see you in the next one.